please welcome head Sicat President CEO of Philippine Stock Exchange and a very pleasant and intelligent fellow.
Pleasure. Good morning, everybody. If I can get the. Anyways, first of all, I'd like to say thank you to Richard, Rebecca, and team for having me on board. It's always a pleasure to talk to a different group of people, every day. Although as part of my job, I do spend a lot of time talking, perhaps too much talking. So, many things have happened over the last few years. And I think what I want to spend time on is not specifically on our market, but a slightly larger view of the world, given that one of the very important topics these days has got to be ASEAN. We're always asked about ASEAN economic integration. How do the financial markets fit into this? How does the Philippine Stock Exchange fit into this? And I thought it might be a good idea to brief everybody about the state of the world. And of course, I will talk about our market maybe towards the end. So just to give you a brief outlook, and I'll try to keep this short, I'd like to talk about ASEAN in general and what it means to have an integration in the capital market. Just to let you know, this has to do with integrating our bond and equities market here in the Philippines, and what does that mean for all of us. Give you, of course, some stock market highlights. We were talking about it on the site earlier this morning, and perhaps a few insights of how we see things moving forward. So, very, very quickly, these two charts, by the way, talk about in ASEAN both the bond markets as well as the equities market. Bond markets on the left, equities market on the right. And the bars actually reflect the size of each particular market. And you'll see that Philippines actually in ASEAN is out of the original 5 ASEAN member countries, is still the smallest in terms of outstanding bond sizes on the left, and also on the right-hand side, of course, Vietnam is smaller than the Philippines. So if you take a look at the top 6, we're kind of just bringing up the rear. Now, one of the interesting themes that we've seen is that when you take a look at trying to measure the size of the equities market, for example, relative to the economy, typically we have this measure that if it's around the same size as the economy, that's actually a good sign. In other words, that the financial markets are keeping pace with some of the metrics in the developed markets. And I think for both of these graphs, you see the right-hand side. And then in the Philippines case, our equities market is roughly the same size as our economy. That's about 1 times. Of course, for other economies, it's slightly larger than that. And I think this actually gives us some encouragement that the growth in our financial markets is catching up to some of the metrics that we would see in developed markets. Now, one of the things I kind of talk about is who actually regulates these markets. And what I've done here is a breakdown for the various parts of the financial sector. You see that banks, securities, insurance companies, commodities, these are all parts of our financial infrastructure. And of course, on the left-hand side, I map out the various countries. Now, what's the theme that you can glean from this chart? And it's quite interesting. Essentially, the more developed the the more developed the economy is, you'll notice that the less number of regulators they have. So you take a look. Singapore, you have 1 single regulator for all of the types of the financial services sectors, right? So, Monetary Authority of Singapore. And you look at the Philippines, we actually have the most. We have 4 different regulators for 4 different types of financial, let's call it, activities. The others have 3, the others have 2. Now, this is quite, I would call it, instructive in the sense that for those of you following the events after the great financial crash in 2008, 2009, the movement around the world in developed economies, when you have Dodd-Frank legislation in the US, European regulators looking at it, and clearly here in Asia, the idea has been to try and actually consolidate regulatory functions, because a lot of these products and services that you find being offered by banks, insurance companies, brokerage houses, and so on and so forth are more or less the same. They're all merging together, yet you have different institutions trying to regulate them, and therefore systemic risk becomes higher, interestingly enough, as you have more types of regulators. So what we're seeing is basically a convergence towards one, let's call it super regulator. That's an attempt in the US. In the Philippines, there's now an attempt via something called the Financial Stability, I believe it's Committee, which tries to get these various groups together. And again, the idea is that you don't have regulatory arbitrage. The way that we found out happened in the 2008 crash. So, what's happening in the capital markets here in ASEAN? I think for these two types of markets, both the bond market and the equities market, you have two major groups of initiatives happening. Something called the ASEAN Bond Market Initiative, as well as the Invest ASEAN Initiative on the equity side. And what are these initiatives trying to achieve? On the bond market, the idea is essentially to have a more or less, let's call it a unified template, how you can issue bonds relatively seamlessly across ASEAN economies, thereby, of course, stimulating the financing sector to help development of the economy and development of a lot of these projects, infrastructure projects and the like. In the equities market, the Invest ASEAN initiative is an attempt to also, at one end goal, perhaps unify, not unify, but actually link all the equities exchanges together. The idea, of course, is that if you have something called the ASEAN Trading Link, which right now is already founded, and amongst the ASEAN nations, 3 countries have now joined it. That's Thailand, Malaysia, and Singapore. What that simply means is that you are sitting in your seat using your phone or your iPad can basically trade and buy today, if you are sitting in Thailand, perhaps equities in Malaysia or Singapore, and vice versa. So what it does basically empowers the retail investor to basically have access to essentially issues and securities that you may not have had access previously. I'll talk about this a little bit more later. In the banking framework, and I guess I see here Judge Odispo, he can actually articulate this a lot better than I can. Again, it's very similar. The idea in this sector is that it's trying to harmonize a lot of the, let's call it the rules, and as well as the general framework that the various monetary authorities have in terms of governing their own internal banking sectors. Why is this important? I think it's extremely important when you take a look at ASEAN, simply because, one, we're a group of diverse nations, not just necessarily in culture or language, but more importantly in terms of regulation and maybe the history of regulation of each of these countries, perhaps say for Singapore and Malaysia, given their kind of shared history previously. So the idea, of course, is that if the regulatory functions are more or less aligned, what that would mean is that the financial sector will be a lot more seamless in between a lot of these activities. So what is the Invest ASEAN initiative? Again, this relates primarily to the equities market. It's really 2 or 3 things. The first item is that we, in terms of the ASEAN exchanges, have been trying to promote ASEAN as an asset class. We're trying to say that ASEAN is an important destination, and investors globally should take a look at ASEAN, not just the components, but actually looking at it at a larger group. There's already, by the way, if you check an ASEAN Exchange's website, and more importantly, there are a number of FTSE ASEAN indices. What that means that there's an actual ASEAN index, which basically represents perhaps the top names, actually the top names around ASEAN by market cap. And then we have individual country, the top 30, the ASEAN stars, and a number of other sub-indices which talk about how you could look at ASEAN. Now this is important because fund managers actually look and utilize indices as benchmarks for how their portfolios behave and how they allocate money into various sub-portfolios. So having different indices available means that there's an ability to benchmark and measure against what the rest of the world is thinking in terms of these things. I talked about the trading link earlier, but I think the more important thing when you look at ASEAN and trying to improve corporate governance standards is this effort called the ASEAN Corporate Governance Scorecard. What that is essentially a benchmark level of disclosure, behavior that we're trying to promote across ASEAN, kind of in a unified manner. And this actually goes beyond what the various Securities and Exchange Commissions, the various stock exchanges actually put as minimum or minima for corporate governance behavior. For example, requirements of having at least 2 independent directors in your company, types of disclosure that we want, and the different levels of disclosure that's required, which may not be required under your specific geography. This effort is also something that comes together because various groups outside of the stock exchanges are actually involved in terms of trying to measure corporate governance behavior. Here in the Philippines, we actually have our own annual, we call them Bell Awards, Corporate Governance Awards. Obviously, it just covers companies in the Philippines. But the good thing about the ASEAN scorecard is that it measures any company here in the Philippines across their ASEAN counterparts. So in other words, it's probably not prone to great inflation internally. You have cross-checks. And I think it's a great thing simply because it raises the level of disclosure. It raises the level of overall adherence to appropriate corporate governance principles. Run your company, disclosure, and a lot of the other behaviors, treatment of minority shareholders, and so forth. Now finally, there's something called the ASEAN passporting scheme. These are primarily for what we call collective investment schemes, collective investment programs. These are regular savings programs. What's the intent? The intent is to basically say that if you have a template of how you would save, for example, for retirement in Malaysia, this particular template should be available in any ASEAN country, and therefore your own investment horizon and portfolio can also, hopefully, later on be managed for in the component, let's call it investee securities that get put in there, bonds, quasi-equity, quasi-debt, and equity, are actually components of ASEAN companies. So it's an important development. Most of the SECs are working on this. It's highly complicated. Again, it's an issue of trying to make sure that the various regulations are, I guess the best term is harmonized, or perhaps in this day and age there's something that is called as mutual recognition, or in certain things that are probably not easily harmonized, at least you recognize as valid across sovereign borders. So, as we're trying to integrate the capital market, it's not just a situation of what's happening across borders. And, but it is effectively being manifested right now in various programs. And perhaps one of the more visible examples of this is what you've been reading in the popular press, something called the Stock Connect program, where you have the Hong Kong Exchange in Shanghai kind of creating a link between each other and generating essentially primarily retail flow. And while it was highly, I guess, a lot of individuals as well as firms were very, very skeptical that this would work. The main fact is that if you just look at the bars in the direction, clearly there's a lot of liquidity going back and forth. In other words, a lot of people are putting their money in the stock market simply because this feature is available. Of course, there's something called northbound and southbound, depending on which geography you're in. And the interesting thing about China is that a majority of those participating in this program, Stock Connect, putting money to work, are actually retail, individuals like you and me. And if I remember the number correctly, it's something between 65 and 70% of the total volume. It's actually driven by individuals putting in money themselves. And the success has been quite good that they're about to turn on later this year the Stock Connect between Hong Kong and Shenzhen. So again, there's a precursor to what we're seeing as perhaps the various links. There have been talks, for example, of ASEAN plus 3 in terms of the trading link. In other words, expanding the ASEAN trading link to Japan, China, and Korea. But here in our market, integration takes a little bit more local flavor, something that perhaps should have been done a long time ago, but somehow has not. That is actually the integration of the fixed income exchange. Is actually something called the Philippine dealing system here. There's a bond market primarily, which also has what we call the depository function, and the equities market, the Philippine Stock Exchange. So why is it important to actually integrate this? I should tell you, by the way, that we are buying hopefully a majority of the equity in PDS, and what the intent is to basically put it in to the Philippine Stock Exchange. So it's important because in many other models across the world, most market operators are what we call integrated market operators. They do all products. They do bonds, they do equities, they do derivatives, they do currency, and so on and so forth. So interestingly enough, we're one of the markets, again, so we're coming in slightly behind, where there has been some sort of divide between these markets. So what you will get, there are actually these small boxes on top of this graph. You may not be able to see it. These are the products that each of these exchanges or these market operators actually do. So what we want to do is basically have an integrated platform so that we can be of not only of larger bulk, but more importantly, of better service to our constituents. Well, here's the rationale. I started talking about this. I think the highlights, outside of saying that we are going to be a much bulkier exchange, by the way, that positions us very well when you take a look at integration in a larger scale, i.e. looking at ASEAN. What is the rationale for a Philippine stock exchange in the scheme of things in ASEAN? Clearly, there's always a role for the Philippines. There's a role simply because on a comparative basis, any company that operates here is likely to get much better valuations by listing on the Philippine exchange for the first part than doing it, for example, in Singapore or Malaysia, even though they may be able to do that. In fact, one example I was mentioning to our group earlier this morning is that Del Monte Pacific, which is a Singaporean listed firm, although they have primarily operations in Mindanao, the Del Monte agricultural firm. They dual listed last year on the Philippine Stock Exchange. And the large deal they did, they raised $1 billion in the Philippines, over $1 billion in fact here, because they got better valuation in the Philippines than they would have in Singapore. And by doing so, they put that $1 billion to work. They bought the U.S. arm of Del Monte from KKR. So they were able to do a massive acquisition program. We're actually funding in the Philippines. That tells you, by the way, how far the Philippines has come as a net saver of funds. But again, going back to the rationale, the other issue is that when we take a look at risk management across the board, the issue that many of the regulators around the world are looking at. So it's better to have a bulkier, integrated operation wherein a lot of these issues of computer fails and so on and so forth can happen. So at least now there's one operation they take a look at, and presumably we at the PSE know how to operate a market. That's at least what we've been telling our regulators, the SEC and the Banco Central. And more importantly, when it comes to something called Basel III. As you know, in the banking sector, the Basel III requirements put a high standard of compliance for banks, including what we have here in the Philippines. required higher capitalization ratios. A lot of banks were raising a lot of money to do that. And they were also what they call putting risk weights